Very good morning, everyone. Charles here, Frgnt Daily Chart Analysis. It is Frgnt Fun Coupon Friday. Why statistically my best trading day? Well, it doesn't necessarily mean that I'll be forcing any positions. And I think AUD US dollar, Australian dollar, US dollar is a good example, really to highlight what I said to those within the Frgnt groups this morning, that as a trader, that is a side effect of being a professional risk manager. Now, when we're looking at taking positions, every position in the market has an element of risk, multitude of risk. And I think those of you that are looking to gain profitability, you have to decipher whether a position is worth the risk based on your reward, based on the confluences for you, based on the confluences even against your certain position. Now, I figured here AUD US dollar is a great example of that in a nutshell. So, if any of you have been privy to the videos that I do pretty much daily, or even my chart analysis, you'll see that I am heavily sell biased on Aussie dollar, US dollar. It's not my personal fault, it's just the technicals are telling me that I can't buy, therefore I should be looking for short positions. So it's as simple as that for me on this pair. Now, Aussie dollar, US dollar, it is providing or it is presenting what looks like quite a nice short setup. And of course, in alignment of what I want to do, of course, I'm feeling the push to want to short. Although I am a profitable trader, I've been trading for just over a decade now, I still, like many other traders, will have the urge to execute a position when I know it is not fully ready. However, what I allow to take precedence is the technical analysis to actually guide me and say, okay, Charles, well, if you are going to take a position slightly prematurely, how are you going to manage your risk? So for good example here, I'll give a quick breakdown: weekly time frame, higher time frame, weekly order block. Price is pretty much trading within that weekly order block. That is this grey GAN box to those highs. So if I were to superimpose that for a brief moment on all intervals, you guys will see on the 15-minute time frame that we are trading within that higher time frame weekly order block, where I am of the belief that price at some stage within that area is going to look to short. Now, of course, when I start to refine those areas down, of course, I'm not going to be trading from a weekly order block. I need to refine down through a daily, down to the 4 hour, and so on and so forth. So, refined within that heart, within this order block, up at the highs, the best place to really want to be looking for is short up at the highs within your GAN box that you're trading from. There is a daily order block right up at the highs, as I've mentioned. However, that's not where price action is at the moment. So when price isn't at my desired point of interest, I now need to rely on price action in terms of what is price action doing to give me the incentive to short a little bit prematurely. So first and foremost, that is the risk element coming into my mindset, not just the trader element. But of course, I want to trade AUD US dollar short. There's no questions about it. I want to pull the trigger. I can't stress that enough, particularly because it is the only position that I can take. Short longs are very much so off the table for me. So looking at this today, I have to look at the 4 hour time frame first and foremost, or in fact, we'll take a step backwards to the point that I wanted to make. Now, based on my risk management, based on my strategy, I use 50 EMAs from the weekly down to the 4 hour time frame. Now, when I come to this market now, I can still see that price is failing to break and close below that daily 50 EMA. Why is that of any importance? Well, we can see where price was above that for that daily 50 EMA. We can see where price is respecting it. We've had a subtle clue here that could well mean, as I've mentioned previously, after that low, a potential lower high for that lower low continuation. Then it's down to my technical ability to decipher whether where price is now, is that the area in which price is going to look to make that that lower high before that lower low continuation, with the recognition that the much better area is going to be slightly higher. So straight away again, how, Charles, are you going to manage this type of position when you could be caught off guard? Now I need to take other things into consideration. For example, on the 4 hour time frame, is the 4 hour time frame on side? I.e., how is price action and structure, and how is that 4 hour 50 EMA? What we can also see is that yesterday's daily candle, sorry to backtrack, I don't want to miss anything. Yesterday's daily candle made an attempt to break and close below that daily 50 MA. And my most desired outcome, to have the proof that this area is indeed perhaps the lower high area for that lower low continuation, would be for a daily candle to at least close below that daily 50 MA. Then I would have the certainty that on the lower time frames, we have indeed started that trend towards the downside, and then we'll wait for the pullback for the short. However, again, if I move forward now, looking to that 4 hour time frame, I don't really have that information. I'm currently, my bias is against what I would like to do. So my bias, the technicals are telling me not to do that. And that's the difference between trading your order blocks and points of interest blindly without really understanding what's going on. And of course, price may just tap into this area and short down, but does that mean it's going to be me that is going to be in that short position just yet? Perhaps, based on my risk management, perhaps I may well look to take a limit order and accept the risk that I am pretty much offside with this trade. And just to go into that with a little bit more depth, 4 hour, we have closed above that 4 hour 50 EMA. Yesterday it looked good with price having that push to the lows, and of course as price gravitated beyond that 4 hour 50 EMA, I had every looking belief that we were looking to reject that towards the downside and hopefully close below it. Unfortunately, we wake up today to see that the 4 hour 50 EMA is keeping price there. And that's not really the desired point, the desired place in the market that I would like to short AU from. So I've got a variety of options. What I'm able to do is just fully accept the risk, perhaps even reduce my risk, and understand that this is not a high probable position. It's a good looking setup, but the fundamentals of the technicals are against my position. Therefore, I have quite a high chance to lose this trade. Equally so, trading is just trading, and markets will do what they want to do. So I can look to take this position based on setup only, and a potential entry criteria, and understand that the fundamentals of that technical that I've just described are against me, and understand that price may well just do what it wants to do. Alternatively, the better option would at least allow myself to trade alongside one of the EMAs that would help me. So what that would seek to look like would be price actually breaking structures towards the downside. Breaking structure towards the downside on that 15-minute time frame will automatically, I'd like to hope that then a 4 hour candle as 15-minute, I'll draw it out for you, as we have a 4 hour candle close below that 4 hour 50 MA, this structure point here, you will already see that we would start to get a trend on that 15-minute time frame. That now becomes a bit more of a desired type of position that I want to take, because now I can say, right, 4 hour candle closed below 4 hour 50 MA. So we're starting to look good. 15-minute time frame, of course, we haven't broken most recent lows, but we can understand that because price has made that move. Price is now coming back up to that area, and it's down to the speculator to choose how they want to trade from their point of interest. So this absolutely would be the better case scenario, to wait for that 4 hour candle to close, wait for that 15-minute price action to develop, then wait for price to pull back up into that area. If this area has already been mitigated, then when price returns to those highs, you'll have to then wait for your entry criteria, which for me would be, I wouldn't tell you that actually, but along those lines. So you get the gist of what I'm talking about in terms of the technicals to wait for, to turn this into not just a trade based on what you see, but a trade based on what the charts are also telling you. So at the moment, of course, every strategy works. If you're going to take that as a limit order, absolutely, limit orders work. If you're going to wait for price to break out of the break down first and foremost, and then pull back, all strategies work, but also all strategies lose. So therefore, be very good, or in fact, be very great. Aspire to be great with your risk management and understand that as a trader, your role isn't just as simple as clicking buy and sell. You really must understand that you're in this game to be a risk manager, and managing your risk is a core fundamental. And of course, I won't make too many friends along the trading dictionary by saying it's not all about making money. Of course, it is all about making money, but you can make money today, not be able to manage your risk, and lose that money tomorrow. So how does that play? You've made money for today, great, but what about tomorrow? You could lose it all by not being able to manage your risk. So for me already, up at this chart, I can understand if I'm going to take this immediately, I'm going to reduce my risk. Perhaps it won't be 1%, perhaps it won't even be 0.5%, perhaps it could be 0.25% to take this position, so I can feel comfortable that I've taken a position that isn't ready and I'm going to trade it. However, if I get the desired breakdown with the pullback to those highs, then that trade becomes no longer a 0.25 type of position. It then becomes perhaps a 1% or a 0.5% type of position that I'll be happy to risk on my accounts. So I hope that makes sense. It's just me going through the charts this morning and just understanding that, okay, AU's at a nice point of interest. Okay, then, Charles, well, does that mean you're going to be looking to short that immediately, despite how good it may look, right? And just to finalize on that, of course, you see this break. That's the low. That's over here on the 4 hour time frame. We have broken most recent structure points, so it all looks good. After the low, you're expecting the lower high to come out of the market for that lower low continuation. Also, it matches up very nicely on the daily time frame. If you consider this as a break below most recent bullish structure points after the low, expecting that lower high for the lower low continuation, we certainly have the synchronization across the pairs. So everything is valid, regardless of how you want to take that trade. But I just want to stress risk management, because particularly in the age of looking to solidify yourselves with trade funded trading accounts, you often forget that trading, it is a marathon without a finish line. So why is it that most are attempting to sprint when there is no finish line? You may as well walk your way through the entirety of it. If you're going to be trading for the long term, what's the rush, right? So also something that I mentioned this morning is that I believe most of the biggest flex is actually saying that, well, I'll be able to trade in 2 years. That's no problem. But those of you that fail to manage your risk, how confidently can you say that you can even trade tomorrow based on the fact that one particular trade could be your risk to ruin? I know that based on my risk management for the next 10 years, I can trade quite happily with ease, and if you can start to say that with confidence, that's you no longer just being a trader, but actually a professional risk manager. And that, in essence, is your job description. So thanks for listening, everyone. I hope you haven't been sent to sleep with that. I think it's very relevant if you're looking to improve in your trading. And yeah, we'll see how AUD/USD plays out throughout the day. Whilst I'm there, I'm looking at GCAD today. Again, GCAD came into this 50-minute order block yesterday. It was mitigated, so it did sway me against taking that with any immediacy. Aside from that, I probably would have taken a limit order again, down to risk management. I could see a much better area up at those highs. So without full confirmation from this area, which I was waiting for price to fall, come back into the point of interest, look for the short, I wasn't happy to take it because there was a much better point of interest up at the highs. This 15-minute has already been mitigated. I'm not seeing this as a double top in terms of sell opportunity. What I'm seeing is liquidity light to the highs. So I could absolutely see that type of scenario playing out before the move. Again, was I correct in terms of what the market's telling me? No, the market shorted from that area. It gave me a big middle finger. Nevertheless, in terms of my risk management, was I correct in order for me to be able to confidently say the next 10 years I'll still be able to trade if I'm able to approach the markets with that level of discipline? Absolutely, yes. A big green thumbs up. So whenever price moves, it doesn't necessarily mean you should be the one fueling that move with liquidity. For me now, coming to the charts today, all I see is price has developed better for me to take a potentially more aggressive position than I would have liked to have taken yesterday. What this would have installed and what this does install in many traders is that, well, let me take every trade as a limit order because every time price comes to an area, it moves. Incorrect. Every time price comes to an order block, of course, there will be a reaction. That is smart money concept. That's why there is an order block left behind. We shouldn't be sidetracked by the fact that price is reacting to an order block. If I go down to the 1 minute time frame and search for you a bullish engulfing candle that has left a bullish order block behind, and price comes back down to that order block, and I then revert to the 15-second time frame, you will see a reaction from that order block. It's as simple as that. So every time there is a reaction in the market, just know it doesn't necessarily mean you need to be in it. But for me today, I find that way more comfortable to wait for price to come back up to that area to take a short. You can see my alert just there. DXY, well, let's see if the DXY wants to play ball with us today. I was wondering whether we are in a range or whether I can revert to higher time frame directional bias. Unfortunately, well, it doesn't matter how the cookie crumbles. For me, we are in that nice daily range. It's very evident, so we'll be looking to manipulate the highs and lows of that range. Let's see if the DXY will just continue to respect that range. If it does, of course, DXY strength coming out of that market now to those highs. If it respects it at the highs, we're looking at DXY weakness. Of course, I am also planning other case scenarios that, in fact, if we just roll out of that range into these refined areas just here, for good example, I will be looking for immediate reactions from these areas on the DXY, particularly because we are looking to reject that daily 50 MA to the upside for the day. And then with that said, we have good looking range back up to that 4-hour 50 MA where price is respecting it to the downside. So if price wants to melt down to here, perfect. We have good range on that DXY where we DXY be looking to gain a lot of strength, and then if we then sidestep over to a cross bear, we can then see where we would like to see that weakness coming out, perhaps on a sell on EU or potentially a sell on GU or even a potential long position on US dollar CAD. So we'll just have to see how that cookie crumbles. And I'll leave that there. That's 18 minutes of your life. So thank you very much for your attention, your support across the channels. I appreciate it, and I just hope that the technical breakdowns and analysis help you on your journey. Take care, Charles.